together.
Can I have your attention, please? If I invite you to be seated. Bonjour, a very good morning. Honorable Mahim Kumar Siriton, Minister of Financial Services and Good Governance. Mr. Vinay Guday, Director of Mauritius Economic Development Board. Sanjeev Gupta, Executive Director, Financial Services for AFC. David Bemelango, Group Deputy Managing Director and General Counsel, Eastern and Southern Africa Trade and Development Bank, TDB. Ravin Daji, Managing Director of ABSA Mauritius. And Mr. Nes Ruo, Acting Head for Syndication and Distribution / Principal Origination and Coverage Division for Development Bank of Southern Africa, DBSA. Excellencies, distinguished ladies and gentlemen, all existing protocols duly observed. Very good morning to you all. My name is Mahad Ahmed. I'm the Managing Director of AME Trade Limited, the organizers of this conference. On behalf of the AME Trade team, it's a great privilege and pleasure for me to welcome you to the 5th edition of the African Pensions and Alternative Investment Conference, taking place again at this beautiful venue. After 2 years of virtual conferences, it's a delight and a breath of fresh air to be back in Mauritius and to be able to meet finally in person. We've been consistently hosting this conference here since 2017. Of course, we had to pause and meet virtually for the last 2 editions. I'm sure you're all aware we are now in very much a new world. I'm glad to report to date we have over 120 delegates from 16 countries, 40 speakers, and over 100 attendees joining us virtually. I can see quite a number of familiar faces, and I also look forward to indeed making new friends. Just to perhaps give you a bit of a reminder on what is the overall objective of this conference. Number one is to provide a platform for education and knowledge exchange. Pension funds are quite a difficult subject matter and quite rare to have so many of them in one place. Two, to advocate for and promote the role of pension funds in advancing the economic development of the continent while showcasing the alternative investments with proven sustainable returns. And of course, to provide a platform for networking and business development. The theme of this year's edition is navigating the recovery, allocating to alternatives for higher returns and sustainability. This has been carefully chosen to reflect the current developments in the pension funds and alternative investments industry, in particular implications for African pension funds, considering the global macroeconomic outlook in a period which, as you all are aware, rising interest rates, supply chain pressures that are still persistent from the pandemic, that technically still with us, but we learn to live with it, the need to overcome the infrastructure development gap, plus the geopolitical situation. So there's quite a lot to unpack and to go over the next 2 days. And with the help of seasoned industry experts, that includes over 40 speakers, as I mentioned, we have to dive into the details, including anticipated pension funds reforms in some of the countries, the accelerated shift to defined contributions in a number of countries, and the gradual phasing out of defined benefit schemes. We're also looking at the post-pandemic investment climate, solutions for accelerating institutional investment in infrastructure, the challenges of energy transition and the response to climate change, as well as investing for sustainable impact. I would like to take this opportunity to express a profound appreciation to the government of Mauritius, represented here by the Honourable Minister for Financial Services and Good Governance, and other stakeholders, such as the Economic Development Board, Mauritius Finance, Financial Service Commission, and of course, our awesome, excellent local team, C Communication, led by Cora, for all the background. Cora, if you're here, just put your hand up so people can see you. She's right at the back. And our utmost gratitude also goes to sponsors of this year's edition. Platinum sponsor, Africa Finance Corporation. Gold sponsor, DBSA and ABSA Bank. Silver sponsor, TDB. Associate sponsors, Africa 50. Moravia Capital Investment, Rescura, Concord, InfraCredit, and Ellis Advisors. We're also grateful to the various industry associations and partners at this conference, we truly appreciate your moral, technical, and financial support, without which this conference would not have happened. Please join me in giving him a big round of applause. Thank you very much for your support. As it is a custom, we have quite a number of social functions happening throughout the 2 days, including invitation-only business breakfast, coffee breaks, gala dinner this evening, closing cocktail reception on Friday. So we encourage you to actively participate and network with your peers. Up-to-date information is available on the digital app, which you can see the program and all the profile of the attendees. So if you haven't downloaded it, we encourage you to do so. Pensions are already quite a powerful investment forces in Southern Africa, and we've started to see a period of fast growth in both East and West Africa, in some key markets growing at up to 20% pre-pandemic. In closing, before inviting the keynote speakers to make their opening remarks, I really welcome you all. I thank you for your attention and wish you fruitful deliberations. And now take the opportunity to invite our first keynote speaker to make his welcome remarks, Mr. Sanjeev Gupta, Executive Director of Financial Services for AFC. Welcome, Sanjeev, and thank you very much for your support.
Good morning, ladies and gentlemen, and Mr. Minister, thank you for being here. It's kind of tough to even believe that it's been 3 years from the time we met last. And I made the original mistake of not being able to recognize 2 very beautiful ladies in succession because I hadn't seen them for 3 years. I hope that you guys haven't made the same mistake. But on a more serious note, I think the 3 years that has passed from the last time we met has been a particularly poignant and profound period in Africa's history. Because in Africa, we have always believed that the future has to lie in our hands, and resilience is what is going to make us survive. And if ever there was a period in history where Africa had to wade it alone, row it alone, manage its own affairs alone, it was this last 3 years. Unfortunately, the Russia-Ukraine war has extended that lonely journey as the rest of the world is busy with their own self-inflicted challenges. The reason I'm highlighting this is because it is contextual and it is relevant to today's conference. Because if Africa is going to be resilient, is going to be independent, is going to take charge of its own destiny, it has to start by managing its own capital for its own good. And today in this room, collectively, what you represent, ladies and gentlemen, is the largest pool of Africa's own savings, the pension funds. And we have to find a way of making those funds be deployed into capital, into long-term capital for Africa's own development. From my side, and I'll have an opportunity to speak to you later, but from my side, just a quick reminder, I represent Africa Finance Corporation. I'm a board member there. We are a $10.5 billion institution today as I speak, invested across 36 African countries. We are rated A3 by Moody's, which makes us the best rated institution after African Development Bank on the continent. One of the few institutions, if not the only one, that didn't get downgraded during COVID, gives us unparalleled access to capital markets. Raising money is not our problem, deploying is, which is why we want to work with you all to see how we can develop Africa's infrastructure and industrial base. And that will be the conversation, hopefully today. Thank you again for your time, and thank you for coming, and thank you for allowing AFC to host you guys here. Thank you.
Thank you very much, Sanjeev, and we look forward to your presentations later in this afternoon, this morning. And I invite David Mamlinga, Group Deputy Managing Director and General Counsel for Eastern and Southern Africa Trade and Development Bank. Welcome, David.
Thank you and good morning, everyone. Honorable Minister, good morning and very nice to meet you this morning. Well, on behalf of TDB, the Eastern and Southern African Development Bank, I want to welcome you to this wonderful conference. It's always a pleasure for us to be a partner with African pension funds with this particular event. I'm sure many of you know of TDB or know about TDB, but just one word or two is we are another African multilateral institution operating in 22 African countries and soon 23, 24, with a few additional countries joining the TDB stable of member states. We finance trade finance, we finance infrastructure development, so we play on the two big areas that for which Africa experiences huge gaps in funding. And our capital structure has been built in a way that allows us to welcome pension funds as investors actually in TDB. So we are very happy to count some of you among our shareholders as Class B shareholders and receiving dividends over the last several years. So the reason why we support pension funds and we love joining you in this conference is because we see our partnership as something that not only builds institutions like TDB, but most importantly is critical in achieving what Sanjay was referring to, the need for Africa to finance its own demands. As we hear about the need for investment to allow Africa to prepare to react to against the impact of climate change. The last 2 years, as every country receded back into itself, brought home the point that indeed we have to be self-sufficient as much as we can as a continent. And that means relying a lot on your capital. Institutions like TDB are set up to facilitate how you can invest your capital safely on the continent, because you may not be in the business of sourcing deals or underwriting deals. That's what we do. And that partnership is critical because we believe your perception of risk on this continent is not going to be the same as the risk perception of an investor from the United States or from Europe or from Asia. Africa is punished on the risk perception scale. We all know that. Countries with almost equal ratings in Central or Eastern Europe get much cheaper funding than we do, for no good reason other than perception of risk. Even though performance of African sovereigns and Africans has not been that bad historically. So you as African managers of African capital, we as TDB expect you to have a different risk appetite. In this moment when the world is looking at onshoring and nearshoring as a way of managing the risks of very long supply chains, in these times when Africa is trying to add more value to its commodities, as we were discussing just a few moments ago with fellow speakers in the room, the breakout room, we need you, we need your capital. We need it invested on the continent with the right partners to develop our nearshore supply chains, our onshore continent-wide supply chains, to support the AfCFTA, the trading across Africa. And we are all ready. So we are hoping, I'm hoping that during this conference, a lot more will be learned about how to do it safely for your contributors, for the pensioners for whom you are managing the funds, safely for the beneficiaries of those projects, of those investments, and safely for our continent. So once again, I really, really thank you for attending this conference. We look forward to continuing these conversations in the hallways, in the breakout rooms, in the various sessions. And thank you very much once again. Good day.
Many thanks indeed, David, for that very insightful remarks. I now invite Ravin Deji, Managing Director of ABSA Mauritius, to make his welcome remarks. Thank you.
Thank you. Thank you very much. On behalf of ABSA Group, wish you a warm welcome to this conference, but also to Mauritius. Some of you, I'm sure, have traveled after a long time, and it's not a bad place to come on the first visit. Honorable Minister, ladies and gentlemen, again, thank you for attending this conference. As Sanjeev said, all of us may have exactly the same problem, very long from a liquidity perspective and very short on pipeline for assets. I think it's not a bad problem to have, but I guess all of us have exactly the same issue. Now, taking on what David is talking about, perception, and some of the other issues that we're facing as an industry, inflation, interest rate, geopolitical tensions, shortage of skill, which is another key area that we all need to think around talent and talent attraction in our industry. I think managing perception is key. And here, I think we all have a duty to ensure that from a governance perspective, we're doing the right thing all the time. If you look at some of the other risks that we face as an industry in Africa, mainly depreciating currencies, compounded to that, if all of us are chasing higher returns, and if we believe that private assets in Africa is what we should do, I think getting the governance right is key. We also present ABSA in around 10 countries physically, but we've got representation in another 2, so 12 countries. And in most of those countries, we've been there for 100 years, deep knowledge of the country and on the key players there. So I've got a number of colleagues from ABSA sitting in the room. I invite you to interact with them and see how we can work together and partner together. I'm also glad that this conference is being held in Mauritius once again. We believe we could, as a bridge, from the different corridors of investment into Africa, we can play a bigger role. So with that, I wish you well, and I'm very keen to hear deliberations, especially on the different issues that the pension fund face, including the big funding gap we've got, decreasing returns, and so on. So looking forward for this conference. Thank you very much.
Thank you very much for that, Ravin. And I invite Nes Ruo from DBSA to make his opening remarks. Thank you.
Okay. All protocols observed. Greetings to all the distinguished guests and delegates in this place. The DBSA is glad that once again the pension industry is gathering in this beautiful country to engage, share ideas, and crafting solutions to find better ways to enhance risk returns profiles, as well as to meet the requirements of sustainability that has become a much needed issue in investments. At the DBSA, we recognize that the development of Africa is such a huge challenge that requires collaboration of effort and syndication of resources. In recognition of the critical role that the pension industry plays in funding and supporting development in Africa, the DBSA has found it important and continues to support initiatives such as this conference. As a DFI that is at the forefront of infrastructure development in Africa, the DBSA is open to partnership with the pension industry in supporting and funding infrastructure projects in the continent. We take a note that infrastructure asset class is becoming an important addition to the pension funds portfolios in risk management, enhancing yields, as well as for better asset and liability management. And we believe that from that perspective, it is important that a partnership between the DFI, such as the DBSA, and the pension industry get consummated to support the development of Africa. I hope that we'll all have a productive engagement during this conference in crafting solutions for the industry, and we hope that everything would give us into the solutions that can take us forward and support the development of Africa, which is what we need, and we need the long-term capital that the pension industry provides. I thank you and have a great conference.
Thank you very much, Nes. Solutions, that's what we're looking for. I now would like to invite Fini Goody, Director of Mauritius Economic Development Board, for his opening remarks. Thank you.
Thank you, Mahad. Honorable Minister, Mahen Kumar Siratan, Minister of Financial Services and Good Governance, organizers, Mahad and team, every guest, good morning. It's a pleasure to have you here today. And after 2 years of COVID, I think it's easier to talk in front of a camera. So we'll catch up and now try to get up to speed and talk to people, real people. So it's good to have physical meetings again. So welcome to the Pension Funds and Alternative Investment Africa conference in Mauritius. And from EDB, so I'll be talking a little bit about the MIFC, Mauritius International Financial Center, and also I'll be talking about Africa, where we are, where we need to go, and maybe part of the discussions coming up over the next 2 days, you can use some of these points for reflections, and I'm sure it's going to be part of your discussions going down the line. I won't go too much into the details because that will be in several sessions down the line. I see that we have a session on the MIFC later today, I think about 12:30. So I'm sure the details, the nitty-gritty of the IFC is going to come up there. But I think it's important to share with you, we're talking about resilience of Africa, but I would also like to talk about the resilience of Mauritius. And I would like to start 54 years ago when Mauritius got independence. It was literally a poor country at $400 per capita GDP. And it was a monocrop economy at that time. 70 to 80% of the GDP was purely out of the cane industry, exportation of sugar. When the price of sugar was high, we had huge GDP growth that year. And when the price went down, we had a negative growth. And you would see the GDP curve for Mauritius in the 60s, 70s, you will see 5, 8, 10% growth, and then suddenly negative 20% growth, and it was all related to the price of sugar. So diversification of the economy was very important. And that's, I think, what Mauritius did very well over the past 5 decades. We've been every decade diversifying the economy of Mauritius, introducing a new sector, and the GDP per capita kept increasing, as you can see from this chart here. So in the 70s, it was about the industrialization process. There was an export substitution strategy that was launched by the government there then, and we had the textile industry that came out of it. And Mauritius became one of the biggest producers of textile products in the world in the 80s and 90s, for that matter. I think we were third in the world in terms of exports of quality textile at one stage. So diversification, industrialization, textile industry in the 70s. Then in the 80s, it was about moving into the hospitality sector, the tourism sector, which we did very well. We became a very high-end, high-class tourist destination in France, in South Africa, in many parts of the world. People came, and again, you will see now we had 3 pillars of the economy. With the tourism sector, the GDP went up from $2,000 to $4,000 per capita. So 3 core sectors. Then in the early 1990s, it was about the financial services sector that took it, we started with the financial services sector. And again, you will see in the 90s, the GDP per capita went up again. In the early 2000s, it was about the ICT sector with the cyber city that you will see in Eben nowadays how it is. At that time, 2001, it was 1 tower that was built, the cyber city. And today, this sector contributes to about 8% of the GDP of the country. Again, with that, the GDP per capita went up to $8,000. We were on track. We were in 2019 classified as a high-income economy with a GDP per capita of $12,000, $12,230, if I'm not wrong. And then COVID struck, like the rest of the world. We had for the first time after 37 years of consecutive positive GDP growth, Mauritius for the first time experienced a contraction in its economic growth in 2020. And today we're back on the recovery path, 4.6% GDP growth in 2021, and next year projected at 7.2% GDP growth. Right, we're talking about risk. Yes, the perception, it is a perception because Africa is doing very well. Return on investment IRRs are quite high in Africa, and it's all about perception. But how do we manage the perception? How do we convince international investors? How do we convince other funds to look at structuring funds towards funding projects on the African continent? If you look at globally, you have IFCs, the top IFCs of the world. You're talking about Shanghai, you're talking about Hong Kong, you're talking about London, you're talking about New York, you're talking about Paris, Frankfurt. None of them are really actively promoting funds onto the African continent. So there's a gap. There's a gap to finance funds onto the African continent. And this is the gap that the Mauritius IFC is trying to close. And why Mauritius? Because perception of risk. How do you manage risk? You want to convince people that you can have a jurisdiction on the African continent, strongly promoting funds, structuring funds onto the African continent that is reputable, that can mitigate your risk. And that is what Mauritius offers. Now, if you look at the different accolades here on the board, whether it's about the ease of doing business, whether it's about good governance, whether it's about democracy index, you'll find that we're first on the continent, and we are like a lot of them in the top 20 or top 50 in the world. And that gives some reassurance to the investors that they can count on Mauritius. Added to that, we have a huge pool of highly skillful workforce in Mauritius. You also have, I mentioned, we're back to recovery, positive GDP growth last year and next year projected at 7.2%. We have a hybrid legal system based on the French Code Napoleon, and we also have the Civil Code, Code Napoleon, and the British Common Law, which means from Mauritius you can structure through our mediation centers and the arbitration centers that has been established in Mauritius, you can structure both in Francophone and Anglophone Africa as well. And also, internet connectivity. I mean, we've seen that through COVID, how important it was. Mauritius is one of the few countries in the world that is 100% covered by fiber optics. So the broadband and high-speed internet is very important for doing business today. And in sub-Saharan Africa, Mauritius is the only IFC that is considered as investment grade according to Moody's with a Baa2 rating. Right, and also recognition, credentials from international institutions, organizations that really tells you about the credentials of the institutions, whether it's about the EU, whether it's about the OECD, whether it's about the FATF, Mauritius has the recognitions and is considered as a fantastic jurisdiction. And also, the Mauritius advantage, why investing in Mauritius? If you look at setting up an incorporation in Mauritius, if you have all your papers right, you come to the ADB, within 2 hours, you can have all the papers that you need to go to the bank and open your bank account. Of course, you need to have all your papers right, because if you don't have them, it will take some time. No minimum capital required. There's no foreign exchange controls, 100% foreign ownership allowed, flat corporate income tax rate, and no capital gains tax on dividend, and also interest withholding tax. We don't have these in Mauritius, which make it more attractive for you. Free repatriation of profits, dividend, and capital. No estate duty for you, those of you who wants to invest in Mauritius. No inheritance and wealth tax as well, so which means you can transfer your property to people in your family. And also in the GBC, you have a partial exemption of 80%, which makes the net effective tax rate at only 3%. Another thing that is very attractive for Mauritius is the network of DTAs and IPPAs that we have, and even within the African continent, we're talking about 21 DTAs and 23 IPPAs. Free movement of capital, we mentioned that already. We mentioned the arbitration centers and the mediation centers in Mauritius. The banking system in Mauritius is very robust. And also we have an innovative stock exchange that is very good for raising capital as well. So All these details, I'm sure during the day you're going to hear more about all of these attributes of Mauritius that makes Mauritius attractive. Since we're talking about pension funds, so I stole this slide from the FSC yesterday, so I'll just share it with you. So why Mauritius? Of course, we look at stability. When we're talking about risk, the three main risks that we look at is political, social, and economic, and I think Mauritius has a good mix of all three of them. And also, it's easy to set up and operate. We mentioned that, operating a pension scheme in Mauritius. We have several international banks in Mauritius. We have ABSA, Mr. Ravindaji was just speaking earlier today. We have the TDB also based in Mauritius, but other than that, we have HSBC and all the other banks that are operating in Mauritius. Rule of law and also the ultimate court of appeal being the Privy Council from UK gives you a further reassurance being based in Mauritius. So these are some of the reasons why you can domicile your fund in Mauritius and use Mauritius as a gateway for structuring funds across the continent as well. Now, this is just a summary of the cumulative flow of funds from Mauritius to the African continent. So a recent study has shown that $82 billion have been structured to the African continent from the Mauritius International Financial Center. And you can see how it's been distributed all across the African continent, of course, the bulk of it going to South Africa, and creating about 4 million jobs on the African continent at the same time. So it shows that the Mauritius IFC is really centered around creating value, creating jobs on the continent. We're talking about resilience. We're talking about private equity. The AVCA, or the Africa Venture Capital Association, mentioned that 78% of pension funds in Africa is backed by government bonds. And that's why we're talking about alternative investments today. Because I think if we look at, this is my last slide, if we look at the resilience in the African continent during COVID, we've seen a lot of investment going into essential and emergency services. So we've seen a shift. We haven't seen a decline in investment, by the way. Whether it's about venture capital, you will see it's $1.4 billion in 2019. It remained that amount in 2020 as well. Whether it's about private equity, which is also about over $1 billion, but it was maintained in the post-COVID situation, and it was about essential and emergency services, but we've seen a rise in healthcare, fintech, for example. If you look at fintech and mobile services, today accounts to 9% of the African GDP. It is expected to close on $190 billion by 2025. So the rapid rise of disruptive innovation services across the continent, which is the home of these type of services, starting with M-Pesa about 10 or 12 years ago. So it shows that there are opportunities about alternative investments. I know recently there's a consortium of about 20 funds in Kenya that are investing in infrastructure along with the government in Kenya, building roads, building bridges, and so on. So there is a lot of new opportunities coming out of the African continent about healthcare, about fintech, about technology, about infrastructure and energy. It is expected that the investment in energy has to quadruple to $140 billion over the next 20 to 40 years so that Africa can deliver on the energy needs of the continent. Now let's look at Africa in figures. 1.4 billion people, 17% of the world population. Africa is home to 30% of the global minerals reserves, gold, diamond, petrol, whatever you talk, 30% of the global minerals reserves on the continent. Africa is home to 60% on the untapped arable land. And when the food FAO is telling you the food production has to increase by 50% over the next 25 years to meet the demand of the world, you can imagine where most of that should come from. It has to come from Africa because 60% of the untapped arable land is. Yet, if you look at the other side of the equation, Africa is less than 3% of global FDI. Africa is less than 3% of global trade. So we need to balance that. How do we balance that? It's about investing in the right projects. It's about investing in industrialization. It's about investing in bringing Africa up the value chain. And this is where the MIFC and Mauritius wants to position. It's not just about structuring funds. It's about structuring technology, it's about structuring capability, skills to the continent as well. That's why you see we have the arbitration center, the mediation center, we're working on intellectual property, all the attributes that you need to enable investment onto the African continent, to take the continent up along with Mauritius. So that's my message for today. So I will wish you good deliberation during the day. And now, just before I leave, I have the unique privilege to welcome to the stage Honorable Mahen Kumar Seerotan, Minister of Financial Services and Good Governance, to deliver his address. Thank you.
Thank you, Vinay. Mr. Mahad Ahmed, Managing Director of AME Trade, valued delegates, captains of industry, distinguished guests, members of the press, ladies and gentlemen, a very good morning to you all. I must say I'm honored to be here to address you today and would like to express my gratitude to the organizers for the invitation to join you. Many of our distinguished guests have traveled from various regions of the world to be present today at this important gathering. Mauritius and Mauritians are very proud to welcome you today. With sanitary precautions still in place, government has felt that the country is safe enough to drop travel restrictions and masks and welcome the world back to our part of the world for a prudent reopening after a grand lockdown. We could not have asked for a better company. Global cooperation is ever so important to deal with a truly global crisis. From policymakers, fund administrators, to investment professionals and investors, this distinguished grouping clearly demonstrates the growing interest for investments into infrastructure, private equity, and venture capital in Africa. And indeed, the theme of the conference, Navigating the Recovery, could not have been more opportune. A pandemic like no other means that we should also expect a recovery like no other. The theme recognizes the uncertain nature of the global economic recovery, as well as the need for the pension fund and investment management sectors to navigate their way through many challenges and opportunities. The conference, ladies and gentlemen, augurs well in the context of the unflinching engagement of the Mauritius International Financial Center as a leading platform for trade, investments, and capital raising for the African region. This today meticulously elaborated program is highly relevant and timely for us in Mauritius, as government takes purposeful strides in advancing the Mauritius for Africa agenda and raise our standing as an important economic hotspot for Africa. Ladies and gentlemen, at the helm of the Ministry of Financial Services and Good Governance, I would not have missed this opportunity to address you this morning. I have been through this very interesting agenda and eminent lineup of speakers, and I wish I could have been with you over the whole today sessions for the very timely discussions and current global economic context, but fortunately I've had to leave, but I'm sure the discussion is going to be very fruitful. The COVID crisis, still lingering, has given way to the Ukraine crisis, while a low interest rate environment, which has been shaping investment decisions over the last decade, has been compounded by galloping inflation. And now the question is, where do we go from here? Where do we turn if we want these good returns at the end of the day? The environment clearly supports alternative investment in other asset classes. The need for transition is obvious. While we are looking for better returns, we have to look at how and where we can invest in our green and digital transformation. The medium to long-term outlook presents opportunities to accelerate the shift to a more productive, sustainable, and equitable growth through investment in new green and digital technologies. Climate change and weather-related events are making regular headlines with disturbing human and economic cost. And accelerated digitalization, also one of the great consequences of COVID, is also very much on the cards. Ladies and gentlemen, it is clear that pension funds are natural partners to support the greening of the economy. I can assure you that the commitment to more responsible investment is central to my ministry's objectives going forward. We are embedding environmental, social, and governance thinking in our policy decisions to create a more sustainable environment for investment to happen. My ministry, in tandem with the National Committee on Corporate Governance, is working on an ESG framework to achieve our vision of continual improvement in ESG performance. We are working to give the comfort to investors that funds channeled through Mauritius into Africa come with sustainability credentials. Ladies and gentlemen, we are here to talk about Africa. So let's turn to the potentials of Africa for a moment. Africa's renewable energy opportunities are boundless, especially for solar, hydro, and geothermal energy sources. In terms of food safety as well, we must also look at the potential of Africa. The continent has around 65% of the uncultivated, rich and fertile arable land to feed the world. Furthermore, Africa's population is set to rise to over 2 billion people by 2050. Consumer spending will reach $2.5 trillion by 2030, while business-to-business investment will reach over $3.5 trillion in the same period. Naturally, the world is shifting investment focus to Africa to tap into a booming consumer market where investments can find long-term value. In this regard, ladies and gentlemen, you are in the right place to take the conversation forward, as Mauritius will certainly continue to play a decisive and impactful role to unlock Africa's multi-billion-dollar investment opportunities. The Mauritius IFC is key to driving quality foreign direct investment in the continent. After India, Africa is actually the second largest destination for investment from Mauritius, totaling $82 billion. The investment from Mauritius into Africa represents 9% of overall foreign investment into the continent. Mauritius for Africa will continue to fulfill its promise of delivering on the Africa we want, as envisioned in the African Union's Commission's 2063 agenda. As Minister of Financial Services and Good Governance, responsible for the global business sector, I can assure you that I will continue to do all I can to support sustainable investments channeled through our jurisdiction into Africa. And the Mauritian government stands ready to work with each one of you. Dear delegates, pension fund managers, and alternative investment professionals and advisors present with us this morning, I take the opportunity of this forum to invite you all to come and do business in Mauritius. The Mauritius brand is now a mature IFC, which ticks all the boxes from an investor's perspective. As I mentioned earlier, Mauritius is used as a platform of choice for onward investment across the African continent. Investors come our way with the reassurance that they are entering a credible fund jurisdiction, offering end-to-end solutions to fund clients. Our operators, many of whom are present here in this room this morning, will share with you that we offer a seamless service to Mauritius domicile and foreign fund structures. While our fund administrators provide strong middle office, along with enhanced investor reporting solutions to fund managers, these fund managers are now increasingly using the jurisdiction as an efficient administration, accounting, and back office solution for the servicing of funds domiciled in other countries. Furthermore, the breadth of our products offerings, which we are constantly innovating in terms of responsiveness, adds to the completeness of the ecosystems being made available to fund managers for an efficient structuring of their businesses. We have introduced new activities for regional headquarters and fund asset management with the introduction of special tax regimes. More recently, we have launched a new product, the variable capital companies, which is an attractive structure for various types of funds. Ladies and gentlemen, whilst working towards recommendations of the Financial Action Task Force, Mauritius now has a robust and modern AML-CFT framework, which adheres to the highest standards when compared to other highly developed IFCs. Furthermore, Mauritius is compliant with the OECD standards and has no harmful tax regimes, thus putting the country at a level playing field with other reputable IFCs. For all these reasons, and many more, we are confident to see the continued use of the jurisdiction by fund managers and investors. Distinguished guests, ladies and gentlemen, in closing, I would wish to commend AME Trade and its local representative, Communication C, for successfully organizing the 5th edition of this conference in the same host country, Mauritius. I'm told that the majority of attendees for this conference are foreign delegates. What a feat in the present context. The PIA conference has become a recurrent feature in the annual calendar of financial sector events, and the amazing response shows that you have chosen everything right from theme to host country. I wish our foreign guests a very pleasant time on the island and wish you all a safe trip back home. With these words, ladies and gentlemen, I thank you for your distinguished presence and also for your kind interest in Mauritius, and thank you for your attention.
Thank you very much, Honourable Minister Mahen Kumar Suratin, Minister for Financial Services and Good Governance. Thank you for spending a few minutes, taking time out of your busy schedule with us. And with that, now the conference is officially opened. So I would like to invite you for a networking coffee for the next half an hour. Thank you again, and I look forward to seeing you all back in this room in the next working session. So we have half an hour. I would also like to take the opportunity to introduce my co-master of ceremony as of tomorrow, Ms. Anusha Mohun, if you just put your hand up. So we look forward to having a coffee with you all. Honourable Minister, thank you so much again, and let's have a coffee and some snacks. Thank you.